Cerebras was supposed to be the first AI pure play IPO, but regulators got in the way. Now that it's cleared to go public, the IPO pipeline is frozen. So what's the latest on this legit challenger to Nvidia? In IPO Radar news, Waymo is selling way more robo-taxi rides, and Boxabl crowdfunding investors overpaid. Welcome to Access IPOs. This is where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs, and we're still in this IPO freeze that was kicked off by the tariff announcement on April 2nd. So as far as we know, all of the companies that were slated to go public are just not planning to at this point. We haven't heard any updates. But it's worth going back to one of the companies that sort of kicked off this IPO pipeline that was going to happen in 2025. And that company is Cerebras, the chip maker. When Cerebras filed for an IPO, it gave a lot of other companies the confidence to launch their ambitions as well, CoreWeave being the most notable one. CoreWeave ended up being the first AI pure play IPO. Cerebras is now in the position that if they move forward with their IPO, it could thaw the pipeline and encourage other companies, both AI and fintechs and everybody else, to go public. But for now, we haven't seen that happen. We're going to look back at the initial announcement that they were considering an IPO. Then we'll look at the timeline leading up to the IPO, which is actually a really good example of how a company can go from being IPO ready to actually moving forward with their IPO if they had moved forward with their IPO, which they haven't yet. If you're unfamiliar with Cerebras, they are a chip maker. Specifically, they've tailored their chips to improve performance of AI models, to help models develop and train. These chips are bigger than, say, an Nvidia chip, and Cerebras claims that bigger chips are better for AI processing and for AI training models. Also, the testing for these chips based on standardized models like the Llama, Meta's Llama, and DeepSeek, when Cerebras' chips are used for processing those models, they have shown to outperform other chip makers, including Nvidia. Now, the issue is that Cerebras is still a somewhat young company. They don't have the manufacturing capability to put out as many chips as an Nvidia would, but they've proven that the technology is strong for AI. And so a lot of people are excited about this because people realize there are chip shortages and there's going to be a high demand, or at least the perception is the high demand for AI chip processing is just not going away. And so if Cerebras' chips can outperform other chips and do it at a lower cost, then that's going to help LLMs lower their costs and increase their efficiency. And it's going to help individual users who are just typing in requests and prompts into these AI LLMs and just getting a response. These chips are going to make those responses faster. In 2024, we all know that Nvidia was on a raging bull market. And so Cerebras was really looking to IPO into that bull market because the demand was there. But as we will talk about in this timeline, things didn't go the way they wanted to. All right, so Cerebras' ambitions to IPO, the initial announcement came out on January 25th, 2024. An article from Bloomberg that said chipmaker Cerebras Systems weighs IPO as soon as 2024. So when you see an article like that, you tend to believe it on the surface, that they're moving forward toward an IPO. That doesn't mean they're going to IPO in 2024, but they always throw in these hedges like they may IPO as soon as 2024 or they're weighing their options. But in this case, it moved pretty quickly. By April 2nd, the chipmaker Cerebras Systems picks Citigroup to IPO. This is a Katie Roof, Ryan Gold, Amy Orr story. The first article was Bloomberg, Amy Orr, Ryan Gold, Ed Ludlow, Ian King. So these Bloomberg reporters were on top of this story. Cerebras chose Citigroup in April, and they probably chose Citigroup before that, but the reporting didn't come out. And the reason that we know that Citigroup was chosen before April 2nd was that by June 20th of 2024, Cerebras had filed confidentially for an IPO. That's moving very quickly. There was an article in The Information, that was June 20th. And so they went from weighing their options in January to moving forward with a confidential filing in June. That's pretty fast moving. So I think the reporters were a little bit behind it. But by August 1st, Reuters came out with their own story saying that AI chip maker Cerebras has confidentially filed. So I'm not sure if they didn't see the Information article or if they just weren't able to confirm that initial June 20th story. The Information came out with an article on this date or around early August as well to confirm that Cerebras had filed confidentially. And then on September 30th, 2024, the S1 filing dropped, and we all got to see what this company looked like on the inside. When the S1 filing comes out, we get to see financials, we get to see the underwriters who are going to be involved in the deal, we get to see all the risks that are laid out. And the big revelation that came out of the S1 filing on September 30th was that there was customer concentration risk, particularly with this company in the UAE called G42. G42 is an artificial intelligence company that was buying up a majority of the chips, and they were also an investor in Cerebras. So this company who's an investor in the company is also buying a lot of the chips. Their business accounted for about 83% of Cerebras' revenue in 2023. And G42 had a lot of connections with China. And we all know China is politically not as friendly toward the United States as we would like it to be. So just 9 days later, on October 8th, we got an exclusive report from Reuters that said Cerebras is likely to postpone its IPO due to a CFIUS review delay on the G42 deal. Now, CFIUS is a government organization or part of the U.S. government. It's called the Committee on Foreign Investment in the United States, CFIUS. And so this organization was stood up to review certain deals to see if there might be national security risk for U.S. deals or U.S. companies dealing with foreign companies and probably looking at some foreign companies doing business in the U.S. I don't think we ever got an official statement from the government on this. It really came out of Reuters. Maybe I missed it, but all I remember is Reuters reporting this and then everybody knowing that this IPO was dead on arrival until this review happened. The election happened in November and the administration was changing over, and we didn't really hear anything else until about late March 25th, and Reuters reported again that Cerebras IPO was expected to be delayed further because the CFIUS review didn't have the staff or didn't have the right people assigned to the deal to make a decision or to complete the review. This is just on March 25th. It says Cerebras executives were hoping the Trump administration could wave through the national security review that left the chip maker's IPO in limbo for months, source said. Instead, it's been delayed further. Now, that was on March 25th, and maybe that article or that report nudged the government a little bit because 6 days later, on March 31st, we got an announcement that said that Cerebras had obtained clearance from the U.S. Committee to sell shares to Group 42, a Microsoft-backed AI company based in the UAE. So within 6 days, Cerebras was ready to IPO again. Now, if you think back to this, things were a little bit choppy in the market. I think the market peaked in February or March, and we were getting some volatility. We weren't really sure what was going on, but the administration was talking about tariffs. We were getting quite a few IPO filings. We got Klarna, we got eToro, we got StubHub, and so we were moving along really nicely with IPO filings. And Circle, they released their filing on that same day, that March 31st. So everything was going smoothly until about April 2nd. And that's when the Trump administration said that there was a national emergency to increase our competitive edge, that we needed tariffs. You all remember the day. It was April 2nd. Stock markets tanked. Volatility was out of control. And then just 2 days later, on April 4th, we got an article from the Wall Street Journal. And this is really the article that started the freeze. It pretty much said that Klarna and StubHub were not moving forward with their IPOs. They were going to delay things because of the volatility. They said that Chime was planning to move forward with their IPO. It really made it sound like Chime was just around the corner. And so we had Hinge Health and we had eToro. All of these companies were going to have their IPOs that April. But just like that, the Wall Street Journal article said that the IPO market is at a freeze, at a standstill. And that's still where we are today. So Cerebras is now ready to move forward with their IPO, but the market's not cooperating. Now, I think that if Cerebras does move forward with their IPO, it could thaw things out immediately. If they would just say, hey, we're going to do this because we want to be a public company. And the recession that may be coming, we saw that the GDP numbers weren't very strong for Q1. We're seeing job numbers today. I'm recording this Friday on May 2nd. The job numbers came out in the morning, and things look still pretty good. The Fed is holding steady on rates. The market is stabilizing, volatility is coming down, and the administration is doing what it can to try and reassure markets that some sort of deal with China is in the works. Now, I did look through the S1 filing for mentions of China, and really the only risks are associated with like a broader Taiwan conflict. There's really no mention of supply chains or certainly not tariffs. We didn't know tariffs were coming the way that they came back in September when this thing was filed. We only have the one filing right now. They have not amended this filing. I did some research on the side here looking at Cerebras in their China risk. And it turns out it doesn't look like they have manufacturing in China or even supply that we know of. It just hasn't been stated. They're probably getting something out of China, but they haven't stated what that is. The bigger risk with the Cepheus review was this G42's relationships with China. I guess they've worked a lot together in the past. Cerebras is a US-based company with not a lot of China risk. So there is an opportunity for this company to step forward, have their IPO, and thaw the market. But if they do that or not, we don't know. And we certainly don't have any timing yet on this company's plans to move forward with an IPO. Now, that could change this afternoon while I'm editing this podcast. They could say they're going to move forward, or they could update their S1 filing. But at this point, it's all to be determined. There's really 4 paths that this company can take. It can remain private, it can move forward with this IPO, or it could SPAC. We've seen some increase in SPAC activity, so that's always an option, although they've not indicated they want to do that. And then, of course, it could be an acquisition candidate, which would really change things up and would be very disappointing as well because they were supposed to IPO, but that just didn't happen. We do think that the company has diversified its revenue and its product sales because of this review. So just looking now at the valuation of this company, and I've seen shares of Cerebras on the pre-IPO marketplaces quite frequently. Right now I'm looking at Hive, and I can see that the valuation has come down a bit. Shares are trading around $30 a share on the Hive marketplace, and this is as of May 2nd. And that $30 per share price point values the company about $4.5 billion. And by the way, Caplight is also showing the market cap at about $4.5 billion or $4.6 billion and about $30 a share. Yet I've seen shares of Cerebras selling on other marketplaces for about $40 a share. So it looks like some people are willing to pay a premium. But for the most part, this is probably around a $5 billion company now. And if you go back to some of those earlier announcements, and there's a list of the news articles on my website. If you go to accessipos.com, you search for Cerebras, and you'll find a list of articles on that page that goes through this timeline. But the underwriters or the reporters were finding this company was aiming to IPO at a $7 to $8 billion valuation. And with the way that the markets reacted, the way that Nvidia in particular and AMD, the stock prices have come down, it's probably not an $8 billion company right now, Cerebras. And so they may not be motivated to move forward like they were. Remember, they were really getting pushed probably by their investors, but really because of the valuation of these chip companies and what seemed like endless demand. And now that those chip valuations, those public chip valuations have come down, it's possible that Cerebras may not be as eager to IPO. That said, they've done all the work. They've put the filing out there. They've hired who they need to hire. You got to think that they want to move forward. They've hired the underwriters. They've put out the filing. That's really the hard part, getting that filing out there. But now they're going to need to update it every quarter to make sure that it's still current. And hopefully they'll do that. We'll see an amended version here, and then the IPO date will come to light again. If you're interested in pre-IPO access to Cerebras, I haven't seen availability for non-accredited investors in the VC funds. Shares are not in the venture capital funds that we've talked about. If you want to look at episode 8, I do talk about the pre-IPO marketplaces and venture capital funds available to non-accredited and accredited investors. So if you're interested in Cerebras as a non-accredited investor, I haven't seen it. But as an accredited investor, there are multiple opportunities. And if you look at that episode number 8, you'll see where. So Cerebras pre-IPO shares are available for investors that are accredited and are willing to put up a pretty decent chunk of money, usually a minimum of about $10,000 to $25,000 to get access. But as always, you want to double check the valuation to see where the marketplaces are pricing shares. Right now I'm showing you it's about $30 a share as of May 2nd. If someone's selling them at, say, $40 a share, then you're going to be paying a premium. You have to decide, is that premium worth it if you're planning to hold this for the long term or not. Make sure you pay attention to fees, pay attention to the current valuation if you're going to put in a pre-IPO order, and you should probably diversify with other investments if you're investing in pre-IPO stocks or pre-IPO companies. Let's move on to IPO Radar news. This is where I talk about companies that I monitor and report on accessipos.com. I usually write about one new company every week, and then I update an old article that I wrote about previously, usually a few years ago, just to make sure it's up to date. If you go to my homepage and you look at the bottom, you'll find the latest IPO Radar articles, and I like to highlight stories on the podcast that are interesting to investors, and they may be recent updates or recent additions to the IPO radar list, or they could just be old articles that I'm kind of resurfacing because something interesting has happened. And something interesting has happened to a company that I've been following for a while, and that's Waymo. Now, Waymo is a robo-taxi company. Waymo is different than a lot of companies that I write about because it's actually a subsidiary of Alphabet or Google. And so normally I wouldn't write about a company like this because it's not a pre-IPO startup. It's not a late stage or early stage or mid stage. It's just a subsidiary. But there's a lot of public interest in the company Waymo. And most people know, I think they know it's owned by Google or Alphabet. But knowing that it's a different type of company under Google's core business, and the fact that it's growing so fast and it's now valued the way it is, which is above $45 billion or so, Waymo could be a spinoff candidate. And so I cover this as a potential spinoff IPO because Google could either spin this off to its current investors as a share distribution, or it could IPO the company somehow. So we don't really know what its plans are, but we do know that it is not a fully owned subsidiary because Google or Alphabet has taken in some external venture capital funds for Waymo. So we have several prominent venture capital investors, including Andreessen Horowitz, the Canada Pension Fund, Fidelity, Silver Lake, T. Rowe Price. So we have a lot of these big name venture capital investors that have taken a stake in Waymo, and eventually they're going to want to cash out. So Google could either buy those shares back from those venture capital investors just with cash, or they could offer Google shares, or they could spin this thing off. And I think that would be the way for Alphabet to really unlock some value because they would retain most of the shares. And as a publicly traded company, presumably the Waymo shares would accelerate to the upside if there was investor demand. And then Google could use that as a fundraising mechanism, or they may hold on to shares. We don't really know, but we always are biased toward the IPO. But the interesting story that came out is that Waymo is now doing 250,000 rides per week. That's paid rides per week, which is really extraordinary. On my website, I created a chart and a table that shows how this company has gone from August 2023, it was giving about 10,000 paid rides per week, to 250,000. And it was at 200,000 in February 2025, 150,000 just in December. And back in August 2024, just not that long ago, it was at 100,000 rides, paid rides. Just back in August 2024, it was at 100,000 paid rides per week. So we're seeing this extraordinary growth after years and years and years of testing and developing the software and developing the hardware and everything it needs to make this happen. Waymo is now accelerating its rise. Back in October, we got a story that Waymo was valued at about $45 billion. And actually in 2019, it was valued a lot more than that. There was some irrational exuberance going on there. And it was a $175 billion valuation, according to a CNBC article in September of 2019. So we're seeing this extraordinary growth, and you can see on the chart, I'm sharing my screen, or I'm showing you an image there of the chart that I made. Extraordinary growth in rise. And then we also got a second news story, or second significant news story just this week, that Waymo and Toyota have a new strategic partnership to advance autonomous driving development. So if you're familiar with Tesla, a lot of the growth hype for Tesla is based around its ability to create self-driving cars. Now, it has actually really good software right now. If you own a Tesla, apparently you can use the self-driving mode, and the Tesla is going to get you around just fine. And what futurists are saying, or what we're expecting to see in the next 5 to 10 years, is that if you are an owner of one of these cars, that, let's just say Tesla for now, that you could go home and go to sleep and then send your Tesla out like an Uber driver, but an automated Uber driver, to go out and make money for you while you sleep. So the ultimate passive income, right? And so Tesla is well known for this. Uber was looking to do that as well, and they probably have some partnerships. They've gotten out of the business of creating the self-driving software. Uber's going to be involved. But this story that came out was that Waymo and Toyota are working on a partnership. So what it says here is Toyota and Waymo aim to combine their respective strengths to develop a new autonomous vehicle platform. In parallel, the companies will explore how to leverage Waymo's technology and Toyota's vehicle expertise to enhance next generation of personally owned vehicles. And so now we're seeing a direct competitor to Tesla and it's Waymo, and ultimately it's Google, right? Google is behind Waymo. Toyota, you probably can't get much of a better partner. Maybe Honda, and I'm sure other car companies are going to be lining up to do this. But seeing Waymo's growth and how their taxis are providing so many rides, and seeing these kinds of partnerships and watching what Tesla's doing, it's not hard to see into the future where there's these autonomous vehicles everywhere giving people taxi rides. You have elderly people that wouldn't need to drive anymore. We wouldn't have to own a car. You can get away with that now with Uber, but we also look at Turo as this sort of rental car company, the Airbnb of rental cars. We talked about Turo a few times. It was a potential upcoming IPO. Right now, that's where people essentially rent out their car as rental cars, but you would be able to do this with autonomous software. Very exciting development, and Waymo is there. We can't invest in Waymo directly as far as I can tell. The obvious indirect investment is through Google. So if you want to own this company, you would own Alphabet shares and hope for a spinoff, or possibly get invited to an IPO or spinoff. We don't really know how the mechanics of it would work. But with this incredible growth we're seeing with Waymo, you got to think that Alphabet is looking to do something with it, especially having sold off a piece to external investors. I got some estimates that Alphabet has retained somewhere between 70 and 80% of the equity, and they've sold some to these outside investors. So those outside investors want to liquidate it someday, and an IPO is the best way to do that, or at least it used to be. At least venture capitalists used to think that was the best way. It's the best way we think, because then public investors, ordinary investors, can participate in the future growth. Until then, you're going to need to own Alphabet stock to participate and hope for a spinoff, but certainly no guarantees. And of course, Google could announce their strategy or say they're going to keep Waymo forever. We just don't know. There is some synergy with their mapping software. And if they have to get rid of Chrome, which we're seeing they're running into some issues with search and search monopoly, if they have to get rid of Chrome, I don't think they're going to be real eager to get rid of their other growth assets. The last story we're going to talk about today is Boxabl. Boxabl is a modular home company that says they're revolutionizing housing because they're manufacturing these small houses that can be folded up, put on a truck, and delivered wherever they need to be delivered. This is, they say, the future of housing. And it is a pretty cool company. They're doing an extraordinary thing. They are addressing a huge shortage. I did just finish writing about Boxabl, and I published that on Tuesday. This was this week's new radar company. And I've been meaning to write about this for a long time because investors are very interested, and that's because this has been a crowdfunded company. Equity crowdfunding, we've talked about it before, started back in 2012 and really has accelerated somewhat. It's still somewhat of an underutilized tool, and that's because the regulations aren't quite perfect, and there's some organizations working on that, and the SEC is working on it. But Boxabl is one of these larger companies that has used equity crowdfunding to raise funds. Others include Miso Robotics, Aptera is a car company, and EnergyX. Now, what all of these companies have in common is a very compelling story. Not only do they have a compelling product, but a story, and a very visual story that makes it sellable to investors. Meaning, if this is marketed to the right people and shares are available to non-accredited, which equity crowdfunding gives us that opportunity, then they're able to raise money up to about $75 million, I believe, per offering through the regulation crowdfunding laws, and that's Reg D, Reg CF, Reg A+, I believe. And so Boxabl has utilized equity crowdfunding for quite a few years now, and so it has a lot of investors. More than 40,000 investors have taken a stake, and through equity crowdfunding, you can invest in these companies pre-IPO for very low minimums, and non-accredited investors can invest. Now, Boxabl has also taken reservation for 190,000 of these houses, but they built only about 600. Now, the issue I have, or I don't have an issue with the company, let's put it that way. I have no issue with the company, but we did watch a StartEngine campaign to invest in Boxabl close in April, and they were selling shares at 80 cents a share at about a $3.5 billion valuation. Now, the problem with that is that shares are for sale on secondary marketplaces for 10 to 15 cents a share, 12 cents, 15 cents a share at about a $500 to $600 million valuation. So through these crowdfunding campaigns, they're attracting investors willing to pay a very high premium on what the market says the price should be. So 80 cents a share versus 15 cents a share, you do the math, it's about a 5x premium that crowdfunding investors were paying on StartEngine. Now, we like StartEngine because they do offer access pre-IPO companies through equity crowdfunding. They do pre-IPO sales of mid to late stage companies as well. So they're making a lot of strides in terms of offering access to retail investors, both accredited and not accredited. The main issue is that all investors need to be aware of what a fair valuation is for any of these companies that you invest in. Remember, we were talking about Cerebras at $30 a share and Cerebras at $40 a share. You may be able to buy Cerebras on the same date for very different prices, even in a more developed pre-IPO company like Cerebras that's going to IPO. But in equity crowdfunding, it's really about the storytelling and saying, hey, look at the potential for this company. Look at the total addressable market. And so I pointed this out on Twitter that while equity crowdfunding investors were paying 80 cents a share, shares were available at 10 to 12 cents a share, and they weren't really selling. Part of the problem here is that investors who are not accredited are eligible to invest in equity crowdfunding campaigns, are not eligible to buy from a marketplace such as Hive or any of the others. Accredited investors could buy the shares at 10 or 12 or 15 cents a share, but non-accredited investors aren't allowed to invest that way, and so they were forced to pay this premium. And Boxabl is saying, hey, if you're willing to invest in us, we believe in us. If you believe in us and are willing to invest, here's your opportunity. Give me 80 cents a share. And this is all public information, by the way. You can see the link to the StartEngine website where they have the campaign. You can see pre-IPO prices either at notice.co or other providers where you can see that the stock is probably worth about 10 cents on the secondary markets. Hive, if you sign up for an account there, you can see you can actually go and buy shares of this company. So there's no proprietary knowledge here. This is all public information. That if you're investing in Boxabl and you're paying that 80 cents a share, then you're not doing your research to learn that it's not worth that price. It's not worth $3.5 billion. It's probably closer to a $600 billion valuation. And that's just what the markets are saying. And so what does this tell us? Well, first of all, buyer beware. Anytime you see any of these pre-IPO prices or marketplaces or sales, you got to do your due diligence. Find an independent resource that's giving you a price estimate, or find transactions that are happening anywhere. And so there are a lot of these data providers out there. Some of them are free. Some of them you may need to pay a small price. I use Hive. I use Caplight, which may or may not be available, by the way, but I know notice.co is a place where you can get this pricing data for free. But you've got to do some due diligence. And all of these platforms aren't the same, too. So you may have a pricing variation on the various platforms, depending on where they're getting their data and the timing of the data. So even if you do have access to a pre-IPO data aggregator that gives you estimates to the price, it still may not be accurate to the moment. And that's why we want companies to go public, because the public markets is where we get fair prices. It's where we get the transparency, and the public markets is where the hype can stop, because that's where transparency is the best. That's where things are regulated better. There's more scrutiny from Wall Street analysts before you invest. And so buyer beware in these equity crowdfunding opportunities, buyer beware in any pre-IPO opportunity. We really want to see more opportunities, but it doesn't mean you just because you have access that you should just go ahead and invest. You really have to do your due diligence. So if you're a Boxabl investor who bought shares at 80 cents a share, unfortunately, you overpaid. And when you go to try to offload those, you're not going to be able to sell them at that price. But that's part of pre-IPO investing. There's limited liquidity, and you never really pay a market price. One of the interesting pieces of the recent Boxabl campaign to raise money, and by the way, if you go to boxabl.com, you can still invest, but there was a March 19th article. It says, Boxabl announces they reserved the stock ticker BXBL on the NASDAQ. So this company, while they were conducting this campaign, they went and reserved a ticker symbol, which to me is just saying that, hey, we want you to think we're going to IPO someday, so we reserve this ticker symbol. Seemed a little gimmicky to me. Most companies that IPO, they do not tell you the ticker symbol until the S1 filing comes out. Now, this company, being equity crowdfunded, having this inflated value that it's getting from investors, I think it's more likely to SPAC eventually. Maybe it'll IPO someday, but I think a SPAC might be another opportunity for this company. But when a company IPOs, we've found that the secondary marketplaces are very accurate within 20% or so of the true valuation. So if Boxabl went and IPO'd at 10 cents a share or a $500 million valuation, $600 million valuation, the investors who invested at a $3.5 billion valuation are going to be very disappointed. So I don't expect this company to IPO. And if it does, maybe that will provide an opportunity for some of the investors who invested to exit to get some liquidity. But I think it's going to be hard to reach that 5x potential unless this company can really deliver on what they're promising, which is massive manufacturing facilities and supply chain logistics and delivery, global delivery for these houses. So certainly one to watch. It was fun to write about, but seeing that discrepancy between the secondary market valuation and the equity crowdfunding valuation was disappointing. It was a little bit of an uncomfortable feeling that that people are paying that price out there. So the only thing you can do is buyer beware. If you did invest at that 80 cents a share value, hopefully you've learned a lesson to do a little more due diligence. Even though the access was there, doesn't mean it was worth the investment. That's all for today's show. There are 3 ways you can support the show. The first is just to like the show or follow or subscribe wherever you get your podcasts or watch your videos. The video is on YouTube. The video is on Spotify as well. But anywhere you access your podcasts, give us a like, follow, or subscribe wherever you do that. The next thing you can do is subscribe to the Access IPOs newsletter. It's free. It's weekly. Right now, it's delivered on Sunday mornings. I might move that to Monday. We'll see. We might test out some different timing on that. So go to the homepage, accessipos.com, subscribe to the newsletter. And the third thing you can do is check out the links in the description of the show notes of the show. There are links to sponsors who provide investment opportunities to invest in these kinds of companies. If you use those links, I get a small commission. So thanks for visiting our sponsor website. You can also sign up for the Access Club, which is a private membership community just for listeners and Access IPO subscribers. And that's where I share deal alerts, timely news alerts, and a bit more analysis into some of the S1 filings when they come out. There's also an opportunity to connect directly with me and connect with other like-minded investors in the community. So go to patreon.com/accessipos to sign up. It's just $5 to sign up for the baseline membership, or go to my website. There's a link in the menu to sign up. Thank you for supporting the show. That's all I got for today. Thanks for listening. Thanks for watching. And I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.